I'm pleased to have in A Coleman Conversation Rocco Perate, EVP, Meridian Bank. Rocco, you and I have been around this industry for a long time. I'm glad that you've come on to the Coleman Conversation.
Yeah, thanks, Bob. Pleasure to speak to you. Looking forward to our conversation.
You and I have a similar background in terms that we started our career back in the 80s. Well,
Yeah,
that's a long
yeah,
time ago.
yeah.
You were at the money store. I was at the non-bank lender called Government Funding.
I remember them.
A
Yeah,
walk down history lane. And money store story has been lost over time. And I want to revisit that because the money store, in my opinion, revolutionized SBA lending. It made it mainstream. Tell me about the money store and go ahead. This is your conversation or your response to my conversation. Tell us about the money store.
yeah. Money store. A fabulous place to be, fabulous place to learn. A little side joke: when I was trained as a traditional banker in a training program, and thought, what do I want to do? And noticed that the money store was looking for an underwriter, and so I joined as an underwriter. And when I told my father about that I was going to the money store, he said, "Oh, Phil Rizzuto." And if you remember back in the day, the money store had a residential division, and on the commercials here in Northeast, especially Philadelphia, New York, they had Phil Rizzuto, which was a Yankee baseball player known as the Scooter, on TV. And I said to my dad, "Who the heck is Phil Rizzuto?" Because I didn't know who that was. And funny story, going a bunch of years later, Phil retired, or Money Store retired him, and they hired Jim Palmer. So we went
That's
from
right. I forgot
the
that.
guy in his underwear, who did commercials in his underwear. But so I spent 10 years with the money store. I started as an underwriter. I was probably okay as an underwriter, but I really wanted to be in sales. And so I was actually the first underwriter that they ever converted to sales, because I talked myself into the job and when an opening came up. And multi-year President's Club, top producer, all that fun stuff. Did franchise lending, even a small stint there as a sales manager. But really, the culture, the experience, the people, the money store was really what made the place what it was. It was very much a sales-oriented organization. Back when I was there, we were headquartered in the East Coast. We were headquartered in New Jersey. So they hadn't even moved to California yet. So you had a lot of access to, the decision makers of the entire company, the residential plus the money store investment corp, as it was called back then. And we went out to the marketplace. Nobody knew who we were, right? Never, they heard of the money store. So we had to convince them not only who the money store was, but back in those days, you had to explain what the SBA was. Nobody even knew what that was. And if I remember correctly, I think the max loan was $500,000. Bob, was
Correct.
it? Yeah, yeah,
Correct.
yeah.
Correct.
And we were mostly a commercial real estate lender, right? Back in those days.
Well, that's what
Yeah,
I want to talk
yeah,
to you about. The
yeah.
money store had a couple things going for it. Number one, it had the national brand exposure back in the 80s and the 90s with Phil Rizzuto, which a lot of people don't know who we're talking about.
Yeah, right.
But he was a great pitchman
He was.
for the product, and so your BDOs went in, so they heard of the money store.
Everybody
But why
heard of
is
the
why
money
is Phil
store.
Rizzuto
Yep.
pitchman coming to my desk? But you revolutionized the business by focusing on commercial real estate, which did two things. It upped your type of business person that you were working with. Plus, you
Yeah,
had a great loan portfolio.
absolutely. What was interesting is mostly the money store hired ex-commercial real estate brokers,
Right.
and put them out as a BDO. And I was an underwriter for a couple of them, and they were fantastic. And the problem is that sometimes they spent too much time on a deal that wasn't a deal, right? Um,
Well, that's
so
true today, but go
Yeah,
ahead.
right, right. That's true. But yeah, we almost exclusively called on commercial real estate brokers looking for their business. Locally, I was the first lender of types or loan, person to join a commercial real estate group, that met every once a month. And the charter they had didn't even allow that. I just showed up all the time, and they finally said, "Hey, maybe we should change this charter to allow bankers and other people in." But I just went where the folks were, and pitched them constantly on what we could do. And we didn't win everything, right? We still had to deal with some of the conventional lenders that were our competition, and certainly traditional banks. But we knew our product. That's what the Money Store was really all about. It knew its product, and it was all about leverage, and the type of real estate we wanted to do. And the portfolio was fantastic, and our pricing was not the lowest, but we were
but you
fast.
delivered. You
We
delivered.
could really deliver as a company, and that was the reputation we had out there. Was we knew our product, we knew we would move quickly, and we delivered.
Right.
Yeah,
And I was one of your competitors, obviously on a much minor
yeah,
scale. And when we went up against the Money Store, we knew it was going to be a fight because great reputation. You did what you said you were going to do. True, you were a little bit higher, but frankly, so were we.
yeah,
So
yeah.
it was. But what I liked
Well, you were
about
in California too, and California was a little bit more of a price sensitive area,
yes,
right? Right. In the East Coast, I did deals, up and down sort of the East Coast, mostly Pennsylvania, New Jersey, New York, that marketplace. It wasn't as interest rate as sensitive. They were more sensitive to getting the deal done, getting it done quickly. Probably
and
had the
you may
same out
remember
there.
this back in the day. If you were a PLP lender, you could go prime 3.75.
I remember.
And
Yeah,
we
yeah.
government funding, we took advantage of that, and guess what? Now it's prime
We
275.
to do anything under like even to do 2.5, I think we had to go to the president, which was
Oh
Larry
yeah.
Wojdarski, at the money store to get that done. And that was I remember that was a fight just to get that and get that pricing.
Well, it
Yeah.
was a great non-bank SBLC model. And you were number one for how many years in a row?
Yeah,
12,
12
15?
probably, all the 10 years I was there, yeah, we were
Yeah.
number one, that's for sure. And then I left and went to the Heller Financial, which had become number one, as well. And part of the reason I went to Heller was, they had some additional products that we were doing conventional loans as well. We could refinance SBA and do a conventional loan and then do another SBA. And I enjoyed, sort of that. I always missed the money store. The money store, I've developed relationships with people, that'll never change, right?
That remained to this day.
Yeah, yeah,
Absolutely.
yeah.
Well,
And Heller was more transactional, but it was a lot of fun to be there because we could, we had a big name, and we were trying to beat Money Store and all that fun stuff. So I sort of went to the dark side, but it was purely for more products and just to meet my marketplace.
well, what Money Store did for the industry, it showed that you could be a high volume lender, you could do good deals to a specific niche, commercial real estate, which back in the 80s and 90s, those small businesses could not get commercial real estate for those small type of deals. And it was a great model, and
Bob,
anybody who I've met out
Bob,
of the
the
Money
interesting
Store,
thing is what
yeah,
what
go ahead.
made it an interesting model is we were a national lender headquartered in New Jersey and then Sacramento, but we were local lenders because the office I worked in, we had two underwriters, we had closers, we had an office manager, we had a couple BDOs with, there. And so we were local, but we were national, right?
Right.
And so, that I think is lost a little bit in the industry. You have these national lenders, but you don't know that local market, and you can trust the local market from an underwriting standpoint. Back in those days, I took the underwriters out with me on a tough deal, right?
Sure.
Let's go meet the customer. Let's go meet the accountant. Let's walk through the
Let's walk
project.
through it.
Yeah, and learn so much about it. And you had a lot of confidence, which really helped your credit quality.
Absolutely. Well, you knew your market, you knew your customers.
Yeah, yeah,
Guys did it right. Tell me about Meridian. Let's see. I'm looking at the stats now. I only have 831 numbers because of the government shutdown. We don't have
yeah,
year in, but you're number 69, um,
yeah.
91 loans. So you'll go over 100. You're at
Yeah.
86 million, probably pushing $100 million. Tell us about Meridian and what you do there.
Yeah, Meridian's great. Well, on those numbers where we just for that's the fiscal year, of course, and for the calendar year, we're over 100 million. We'll close another 120 million, which Our average is about that's about what we've been doing year by year. We're a small team. We're about 13 people. I manage the team. All group, everybody on the team reports directly to me, from servicing to closing to underwriting. And I also like to be a BDO and chase deals. So I do, like 30 million myself every year. And so to me, that keeps me active in the business, keeps me knowledgeable, and it actually helps me with our process. When I'm at a settlement or an underwriting, I know what's happening and what's not happening. And Meridian's a $2.5 billion community bank in in Pennsylvania. We have a national footprint, but we prefer our local markets, as you can imagine, from a community bank. And it's really been a fun place to be, because they pretty much said, "Hey, Rocco, we trust you." I brought my team over from another bank and then built that team up. And they said, "Hey, we trust you. We like the product, so go run with it." And as a guy who likes to be his own boss, and also has a little bit of a control freak at times, that works perfectly for me. And so I report directly to the CEO. Our portfolio has been performing well. Obviously, interest rates jumping 5 points had an effect on us, but we're a victim of our success, right? So I've been with Meridian probably 7 years, and
Good
we've
for you.
closed, roughly 700, million dollars of loans, and so you're going to have a few go bad here and there, but nothing to worry about. That's been the fun part. And so, yeah, I really like being at Meridian.
Well, you've over your years, you and I have seen a lot of economic changes. We've
Yes.
seen everything you can see. Who would have predicted the pandemic and the impact on Main Street? Um, what is your outlook for the future?
Yeah, it's interesting. I really thought that we would have a little more shakeup in the industry with, deals going bad, and maybe some of the lenders that are doing some wild things, let's call it, would maybe step out. That really hasn't changed. The cost for BDOs is really high. And most of them don't really produce, and so, or at least what I expect. Um,
So saith the sales manager. Go
yeah,
ahead.
exactly. I think it's pretty bright. I mean, I think SBA makes sense
Yes.
always in the marketplace. Being at a community bank, I see all the deals that come through. Or loan committee, I sit on the loan committee. I see the deals that come through on conventional side, and and they're happy to send business my way and vice versa. And so, I think that's really interesting to see the fact that SBA has its place in the marketplace. And I think it always will. We always have our concerns about the economy, tariffs, all the things like you've said. We've been in it a long time. I try to think ahead. I think next year for us, we'll probably do a little less volume.
Okay.
Um, Maybe concentrate more on our local markets where we know
You know
Florida,
the market. Good.
Pennsylvania, yeah,
Yeah.
and really, evaluate where, who we are as a lender from an SBA standpoint. We were really trying to be the number one lender in Philly, and all those things, and that's worked. But now, the team has matured and the portfolio has matured, and I think, at this point I'm looking at, hey, maybe we'll do a little less volume, better, not necessarily better quality, but just know our customer a little bit more, and continue to add value to the bank.
You've
Uh,
mentioned team, and
mhm.
I would like you to address that. You mentioned you have an entrepreneurial streak. There is
Yeah,
a
yeah,
more of a you see it more and more in today's industry where teams will move from one lender to another.
yeah.
Talk to me about your management philosophy and the importance of building your team as a manager.
Yeah, well, thank you. That's boy, that's something I spend a lot of time on, Bob, because um, before everybody came into the office, right? We were local. Now we have people in other states, and hardly anybody comes into the office. But I care about my people a lot, and I spend a lot of time. I talk to almost everybody on the team every day, in some way or another. generally on the phone, but maybe by
Old
text.
school.
Yeah,
Wow.
old school. Yeah, and I think that's important. And I try to, and I do remember their personal things. So our team just went through two babies being born, and
Oh,
and somebody's in the hospital, and all these different things. And we have a text group that goes out that most of the time it's, hey Rocco, I need you to look at this email and get something done. But the other times it's, hey, look at this photo of my kids, my dog,
oh,
and we all use that text as a way to connect, right? We have a team meeting every Monday. Every Monday we go through the pipeline, but we also, go around the room. How's everybody doing? What's happening? And obviously we talk about the Eagles or the Phillies or, any of those things. But we try not to get too deep into personal, but we know enough about each other for a long time to be able to do that. And I think that's really been helpful. But for me, it's just to communicate with everybody. I really feel like I need to say you did a great job. You worked out. Folks who work for me will also know that I tell them when they didn't do a good job or I'm not happy. So I'm really transparent. When you start working for me, sometimes that's a hard thing, right? If I call you up and say, listen, I'm unhappy about this and I'd like it to be this way. But I tell everybody that's what I want to be able to do. Like, go make decisions. We'll fix it if it's wrong, and we'll learn from each other as we go. So I try to empower everybody to do that as well.
how
Uh,
large is your team?
I think we're 13 right now.
Okay, good.
Yeah. So we have some
Well,
servicing folks, closers, underwriters, sales team. Yeah. Yeah.
the $10 million cap, that will happen. I thought it would happen this year.
Yeah,
Obviously, I
me
was
too.
wrong.
Yeah. Yeah.
How will that impact your numbers
Well,
in
first of all, I think I'm in
2026?
favor for 7.5, but I'm not out in California, so
Fair enough.
seeing those deals, but they're bigger. I think we should incrementally go. What worries me about a $10 million cap, just because I'm an old
Sure.
timer, is that you're going to have some community banks do a deal that they shouldn't do because of the guarantee. It's going to go bad, and it's going to be bad publicity for the industry. That's my concern. For us, I don't see us doing a ton of the 10 millions, but I bet you we'll do. We just closed an $8 million para pursue deal. I would have done that, under 7A. And that's all you hear in the marketplace right now, para pursue, para pursue. In my opinion, that's Latin for waste of time because no, everybody talks about doing it. I don't see that many deals getting done. Um, but I hear it out there all the time, and the brokers call me and say, "Do you do para pursue and all that fun stuff?" But so for me, I wouldn't use it that much. We probably do some deals. Again, in the market, people we know, we trust, we want to work with. But it concerns me that there'll be other smaller shops that don't have the experience in the industry, but will try to meet the customer's need and then do a deal that goes bad, causing that bank problem and the SBA publicity. Probably the same thing was said about 5 million, who knows, but yeah, that's where I'm at.
Oh, very good. You've seen a lot of changes in the SB industry, but you've also seen a lot of changes of how entrepreneurs run their business.
Yeah.
What does it take when you're talking to an entrepreneur that you want to see how they approach their business in 2026?
I think it's all about liquidity in my mind.
Fair
Right?
enough. I love that
Yeah,
answer.
yeah. I
Yeah.
mean,
Cash,
I'd like to see that they
cash is king.
understand their cash run. That how much cash they need to operate. When we're making loans, we want to make sure we're building that into the deal. Where in the past, you'd get skinny and try to make a deal work, and you'd say, "Hey, this is the debt service coverage for us." I'm not so worried about the debt service coverage. I am, of course, but I want to make sure that they have enough working capital. It's really hard, I've seen over the years, for people to come back and say, hey, I'm having an issue and I need working capital. Right now you go, wow, I can't do it. So we're adding, express lines of credit to almost every one of our deals. We're also trying to put some permanent, working capital, but we're more having those discussions with our borrowers. What's your cash run? What's your accounts receivable? Those types of things. When I started years ago, as we talked about, what's a balance sheet? Nobody cared, right? And in their
Right.
service industries, nobody cared, right? Just P&L and debt service coverage and collateral, and you were good. Now we spend a lot more time on their balance sheets, or discussing their balance sheets, and trying to understand. Because I think we all ran into COVID delays. Now we have tariffs. We have all these other things. And to me, working capital needs for a small business is so important. So that's where we are. And that really brings me, I also run our other company, a revenue advance business called Merit.
You're on
Oh,
you're
sorry,
on
you go.
your next line. Go ahead.
Yeah,
Go right into
yeah.
that.
Yeah, and people look at revenue advance and you used to be commonly known MCA as a bad business, right? As a one step up from payday lending or something like that. And there's certainly those people out there. But we're owned by a bank. The bank owns the MCA, which is revenue advance called Merit Business Funding. We see probably 3 to 4,000 submissions a month, and fund 25, 30 of those, right?
Talk about a sales funnel. Wow.
Yeah, we decision probably more than that, but we don't win them all, or they go away, or they in final funding they go. But what I really learned in that business is that there's some real needs for that. The pizza oven that breaks down, right? And they need their money tomorrow. The guy that has a chance to get some yellow iron, some kind of equipment to finish a job or take on a new job. We're not doing, I got to make payroll, or I got to pay my taxes, and these are really businesses that operate, again, with the lack of good banking and working capital, and they rely on this. And our success rate, or failure rate, default rate is really low. And you'd be surprised being in that industry. And of course, the interest rates are higher, if you want to call it an interest rate, and the terms are shorter. But man, I wish I could refinance many more of those. I think that the SBA is missing that. I get that you can
I
re-up
agree with
and
you
go get that
100%.
money, but we've done serve pros, we've done businesses that over at our MCA that are SBA like. They just have a certain issue that they just need to execute on quickly. And if you kept your standards, I would love to take those out. Again, I know they could go get another MCA pretty easily, and that may be the problem in the industry. But I think we're hurting small businesses by not giving them an option. We have a deal on our desk right now that is paying $54,000 a month to an MCA lender, and we could go in and refinance that and take that payment down to around $13,000 a
Yeah.
month.
What would that
Tell me
do?
where that doesn't make sense,
Yeah.
So
Yeah.
yeah,
In ballpark, I'm not going to ask Meridian's
yeah.
pricing, but if if another lender was out there, what would the ballpark be on the average interest rate that the lender would charge on these type of transactions, and the average loss rate? Just ballpark it.
Yeah, well, the average industry loss rate is about 10%.
Okay.
Yeah, we're below that, because again, we're a bank and we have certain, a little bit more criteria than maybe some of the others. The business is broken up into what position you're in as well. So either you're in first position or second position or third, fourth, fifth, seventh, whatever. And so there's all of those, and then dollar amounts. So the big players are generally in first position. They're doing loans or funding deals like 100,000 to maybe or 500,000. They're
Okay.
doing some underwriting, and it takes a little longer to do that. We're a second position funder for the most part. So we'll go behind one of the big funders that have done a first position. We're at about 8.5 to 9 months generally, but we'll go up to
Okay.
14 months. We're weekly or daily payments from an ACH. And their interest rates, if you were to call it an interest rate, and California does, and some other states, but we don't call it an interest rate because of
Right.
the way it is.
Right.
But it's about 32%.
Okay.
Yeah.
And
Um,
and I
and where
agree
you
with
get
you.
in trouble in that industry is what they call stacking.
Explain that.
Right?
Explain that.
Yeah. So stacking would be you call me up and say I need $100,000, and I say I can only give you 70, and at this rate and terms, right? And then another, the market goes out and finds somebody else to give them that 30. That 30, of course, is now behind us, maybe with a funder that's going to do it at a higher price, and so forth. Therefore, they stack it. 70 and 30 was the stack, and then and maybe a shorter term. because their money's more expensive and costly, and the payment that the if you call it a payment, the payment that the merchant, as we call them, versus borrowers, is paying is higher than what we expected when we did our 70, right? So it puts stress on them. The other way of stacking is somebody comes, we did a $70,000, you come back to us for, hey, I need some more money, a couple months in, and we take the original money we did plus the new money and give you a new funding. That interest rate becomes like crazy, like 50s and 60%. We
Triple
don't do
digits.
that. We only do it when they're 50% paid in. We won't go below that. And to us, then that's a good customer, right? Because they've been paying us. And we'd rather them not go stack us than do that. If you start stacking us, we won't work with you as a referral source.
What would you tell an SBA lender who there's a loan on the books, they've made the call or the email, or they're delinquents, now they're hitting 60 days, and you find out they're in an MCA type of structure? What would you tell that lender?
I think one thing I would say is give the MCA a call and discuss with them that they and for our MCA and most MCA, we have no personal guarantees, we have no collateral, and we don't file UCCs generally, right? So some of the A paper, as they call it, first positions, will file UCC, but for the most part, we don't. So we have nothing. So we're generally willing to work with that merchant to either extend their term, put them on a hiatus for a little bit, whatever it might be, because once they don't make our payment, right, they're not going to catch up. So I would have that conversation. In fact, the one I'm telling you about with the 54,000, we reached out to them and said, hey, what can we do to make this somehow eligible for SBA? I don't know how we're going to go about doing that, but let's have a conversation. Let's figure it out, because one, they're going to want to take you out, and two, they're at some point they're not going to be able to make that payment.
I'm a good moderator or conversationalist. Brazilian Jiu Jitsu. Tell me about that.
Yeah, that's my passion.
Tell me.
My arm is hurting right now from last night, but so I started it in my mid 50s. Was the oldest guy in the gym, as we call it, and still the oldest guy most of the time. Jiu-jitsu is a grappling sport with submissions. So you have to spar and go hard to learn. That's the only way to do it, really. So it's painful for an old guy, but it's surprisingly very cerebral. People don't realize that it's a sport where I have to think about what you're doing and what I'm going to do. Brute strength. Younger, stronger, and bigger always wins for the most part in life, in these kind of things. But a guy like me at 155 pounds and in his 60s can still compete if I'm strategic, if I can tire you out, if I can plan my moves like a chess match, and control your moves and control my breathing and my emotions. And so by doing that, you can be successful. I read books on it. I watch videos on it. I train. It consumes most of my life. And to my wife's, she doesn't love it that much, all right, because I come home beat up. But it actually plays over into life, right? I
Tell me.
used to
Tell me.
be, I used to really be a lot more anxious and aggressive at times. And jujitsu really taught me a lot about life, of not doing that so much, to sit back, think about it. Not everything has to be plowing forward, doing all those kinds of things. And a lot of the guys I do jujitsu with, so I'm lucky, are Penn, University of Pennsylvania, and Drexel, and some of the college. They're grad students and doctoral students, and so they're not trying to hurt anybody. We do get the regular guys that want to come in and hurt everybody, but after now I've been doing it over 7 years. I stay away from those guys, right? But I've done some tournaments and had some fun with it,
Good for
and
you.
yeah, I want to do it the rest of my life, but last night walking home, I thought to myself, I can barely lift my arm. I said, boy, maybe I should find something else to do.
Rocco Perate, Meridian Bank. Thank you for joining the Coleman Conversation. Thanks,
Thank you,
Rocco.
Bob, very much. Have a great day. Bye bye.
You too.